Good morning, it's Tuesday the 3rd of May. Yes, it is May already. And thanks for joining us here at Atlantic Capital Markets. So, after the UK bank holiday yesterday, we're back with our usual roundup of the economic highlights coming up over this short week. As always, we'll start with a quick summary of the key macro data points coming up this week in the world's markets, and we'll then take a look in more detail at some of the biggest stories straight afterwards. So, let's get straight to it. So, let's take a look at the economic numbers being issued this week. Well, as I mentioned, yesterday was a bank holiday in the UK. But today we'll be hearing the latest interest rate decision down in Australia and an update on employment in the Eurozone. On Wednesday, it's the release of the US ADP jobs report, as well as updates from the US on their ISM non-manufacturing PMIs and EIA crude oil inventories. Staying over in the US, Wednesday is also a key day as the Fed release their latest interest rate decision, something that we'll take a closer look after this. On Thursday, it's the Bank of England's turn to release the UK's latest rate decision, which we'll also talk about afterwards in detail. Also on Thursday, an update from China on the Caixin services PMIs and in the US, the initial jobless claims figures. On Friday, we'll hear how the non-farm payroll employment statistics are looking, and we'll talk about that in more detail at the end of today's video. And finally for Friday, Canada updates us on their employment data and the IV PMIs. And the companies that we'll hear updates from this week are as follows. Well, yesterday we heard from Coca-Cola and Activation Blizzard. Today, we hear from oil and gas giant BP, and they release their Q1s, which we will talk about after this. Also today, it's the turn of Card Factory, JD Sports, Pfizer, Starbucks, AMD, and Airbnb. On Wednesday, we'll hear from Boohoo, Aston Martin, JD Wetherspoons, Flutter Entertainment, and eBay. And finally on Wednesday, Uber released their Q1 results, which we'll give our thoughts on after this. As well as BP this week, oil giant Shell are due to report their Q1 earnings on Thursday, which we'll also discuss afterwards. We'll also take a closer look at retail bellwether Next, who are due to release their Q1 trading statement on Thursday. Thursday also brings updates from Airbus, Barratt's Developments, Lufthansa and Beyond Meat. Finally on Friday, British Airways owner IAG are due to release Q1s, which we'll discuss at the end of today's video. Also on Friday, updates from Intercontinental Hotels and AMC Entertainment. So last week, the markets experienced high levels of volatility as the markets digested rising virus cases in China and a surprise contraction in US GDP. This week, China's lockdowns will remain in focus in addition to central banks and the US jobs report. Triumvirate of the RBA, the Fed and the Bank of England are all due to announce interest rate decisions this week as well. So let's take a look at all those key stories in detail. Oil giant BP are due to release their Q1 earnings on Tuesday. Well, thanks to a surge in oil and gas prices across the first 3 months of the year, BP is expected to report a significant rise in underlying earnings and also cash flow. A key earnings measure, underlying replacement cost profit, is expected to jump 65% to $4.3 billion year on year in Q1. However, strength in earnings is expected to be overshadowed by its costly exit from Russia. BP, through its 20% stake in Rosneft, has proved to be the oil major most exposed to Russia, and therefore is expected to report the biggest hit in impairment charges, which could be up to around $25 billion. Could even be large enough to push BP into a loss for the quarter. Interestingly, the BP share price has been one of the top performing share prices in the FTSE this year. On Wednesday, the Federal Reserve is broadly expected to raise interest rates by 50 basis points, which will mark the second consecutive interest rate hike from the Fed. However, with the hike almost 100% priced in, the bigger focus could be on the Fed's plans for its balance sheet reduction. Fed Chair Powell suggested that the US central bank could move faster than initially expected. Now, there's growing expectation that the Fed could be looking to trim its balance sheet by $95 billion in assets per month. The markets will also look at how quickly the Fed looks to move with rate hikes across the remainder of the year, with growing expectations of a 50 basis point rate hike in June and possibly another outsized rate hike before the summer. So with that in mind, let's keep an eye on the US dollar and US indices. Also on Wednesday, Uber is expected to deliver solid results in Q1 as the economy ramped up after the virus. Well, this is expected to be the easiest period as far as comparatives go, given that the lockdown restrictions we had in Q1 2021. Gross bookings are expected to grow 32% year on year to $25.8 billion. Meanwhile, revenue forecast to rise to $6.1 billion, which would mark a 75% increase. Adjusted EBITDA is penciled in at $132.6 million, a vast improvement after the $359 million loss the previous year. The acquisition of Transplace is likely to lift freight operations. Expectations are for ride-hailing to continue to pick up while the food delivery service, which outperformed in the virus period, is normalising. Well, Thursday is interest rate decision day here in the UK. Now, with inflation in the UK at a 30-year high at 7% in March, and sales plunging, the Bank of England has to walk a pretty tough line between reining in surging inflation without tipping the UK into recession. Surging inflation and the cost of living crisis are already impacting consumer habits and confidence. But that said, the Bank of England is expected to raise rates by 25 basis points amidst fears that inflation could become entrenched and amidst fears that they could fall behind the Fed, which could then drag the pound lower and fuel inflation further. So even if the Bank of England do hike but then sound cautious about the outlook for the UK economy, then the pound could still come under some pressure. So do keep an eye on the pound and of course the FTSE. And also on Thursday, Shell is expected to report a strong Q1 earnings report and outperform its peer BP, thanks to its smaller exposure to Russia. Now, there was still a hit from Russia to the tune of around $5 billion, but the outlook does remain encouraging after oil prices jumped 30% in the first 3 months of the year, and gas prices also gained. Expectations are for adjusted earnings to more than double to $7.5 billion in the first quarter of 2022, and that's up from $3.2 billion in the same period a year earlier. Now, Shell has already said that it is raising its dividend and has ramped up its share buyback program. Given the improvements in cash flow, these will then remain under the spotlight. And finally on Thursday, the retailer Next is due to release their Q1 trading statement. Well, retail is just recovering from a pretty tough 2 years after the virus, and along comes the cost of living crisis, which could see retail enter yet another challenging period. In March, the bellwether Next downgraded its 2023 estimated profit by £10 million to $850 million and lowered its revenue guidance by 2%, mainly due to the closure of its website in Russia and Ukraine, as well as owing to the hit from the cost of living crisis. Well, despite the downgrade, profits are still expected to rise by 3.3%, and total price sales are due to increase by 5%. However, the share price has tumbled some 20% so far in 2022, and as the latest inflation numbers show that the prices of clothing and household goods are rising quickly. And finally on Friday, we'll get an update on the latest non-farm payroll figures over in the US. Well, the March non-farm payroll revealed 431,000 jobs were added. That's just below the 490,000 that was forecast. However, this was more than offset by an upward revision in the February number, where 750,000 jobs were added. That was up from 678,000. However, the unemployment rate fell to 3.6%. That was down from 3.8%. Since then, the US labour market has shown few signs of slowing. Vacancies remain around record highs, and April jobs data is expected to continue to show strong hiring trends. 400,000 jobs are expected to be added in April, unemployment is expected to hold steady at 3.6%, and wage growth is expected to be stable at 5.6%. So do keep an eye on the US dollar and US indices. And also on Friday, British Airways owner IAG are due to report Q1 earnings. Well, IAG, along with the broader aviation sector, have endured pretty volatile conditions amidst a combination of factors. While on the one hand, the recovery in the travel market across the summer saw positive news, that has been offset by rising fuel costs and staff shortages. Expectations are for revenue to rise to €3.32 billion in Q1. That's up significantly from a €968 million gain in the same period a year earlier, when the spread of the virus was still restricting travel. IAG is expected to book a loss per share again this quarter of 11 euro cents. That's still a vast improvement from the 23-cent loss recorded in the same period a year earlier. The airline group has said that it is looking to return to an operating profit in the year's second quarter. The share price trades flat across the year. So those were the big stories in detail. Let's wrap up with a quick look at the dividends due this week. So in the FTSE 100, we'll hear from Croda and Admiral. And in the FTSE 250, we'll hear from Tate & Lyle, Hochschild Mining, Hiscox, GCP Infrastructure and Edinburgh Investment Trust. So there you have it, another short week, but lots happening. As always, thanks for watching. Don't forget to click on that subscribe button to make sure that you don't miss out on any of our regular videos, and especially our special videos, of which we have many coming up. Also, as always, a reminder that if you haven't already downloaded our app, why not give it a try to make sure that you receive all the latest up-to-date financial news and trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.